Good evening. It's Vijay here. Today is Sunday, 10th of August 2025. Today we will discuss about what's happened last week and where are we going ahead in the weeks to come by. Normally, it is a time when we reflect and think of where we are and where we should go. So today is very, very crucial in my opinion because you see, any bull, a consistent bull like me, for more than a year, I have been bullish. And even though markets fell significantly in October, November, December, actually from October to February last year, I did not lose hopes because I felt that was only a long awaited correction. But this last 1 week actually has sown some doubts into me. I must be very frank to admit as to where we are going. Not because it has fallen 6 weeks in a row, and has been a fall because of tariffs, and our stock market has fallen continuously for 6 months. Sorry, 6 weeks, whereas the other markets have not fallen. I'm not talking of only US. I'm talking of Europe. I'm talking of Asia. None of the markets have fallen as much as we have done. Of course, we have had a larger amount of tariff stuffed onto us, but nevertheless, we should, what shall I say, analyze it little carefully. So what happened this week was that Nifty declined for the sixth consecutive week. Now, sixth consecutive week is not uncommon. Of course, the last 5 years we've had only one six consecutive weeks of decline. This was during COVID, and now with the week decline, we have had a 3 month low, and Nifty and mid cap has not done so badly. They have declined only for 3 consecutive weeks. So there is hope for the broader market. So now let's look at also what has happened is FMCG. All those things have been coming down. Realty has declined. Most important is that Sensex also declined for sixth consecutive week. It closed below the 80,000 mark. Psychologically, it's an important mark. It has closed below that, and there's a market cap erosion of 4 lakh crores. So since I have seen an 8 week decline, we have seen an 8 week decline during the Lehman Brothers 2008. I remember those days very well. We've also had a 7 week decline also in the past, and 6 week declines also we have had. Now, common is 5 weeks. 6 weeks is not so common. Of course, 8 week is very rare. It's almost like that, earthquake. Five on the Richter scale is common. 6 is rare. 8 is the mega earthquake. So, mega earthquake happened in 2008 in the markets. So, one has to sit down and take notice and then see whether we will have a 7th week decline or we will turn around next week. So let's take it step by step. So Nifty, which was I mentioned about in 2020, there was a 6 week decline, and the 6th week it ended in green actually. That means I'm saying the lows were held, though it was lower than the previous week. And then we started a significant rally from 7,500 levels, and we have never seen those numbers again, though a lot of negativity around. So this is where we are, 6 consecutive week decline. The one thing which we can notice from this is the decline has been steady. It has not been, for instance, here in sometime in October, for instance, the fall was very, very severe in 1 day, 1 week. And then after the 4th week also, it was quite severe. Here you see the fall has been steady. Now, steady fall can be what we call Chinese torture, where steadily the prices come down, or sometimes it could be a situation where things have not improved outside the market for these 6 weeks. So it has been a steady fall. Then you look at CNX 500, which is the broader market, that also has fallen 6 weeks in a row, and that also has been very, very steady. Bank Nifty also, though it has fallen 6 weeks, but 1 week of the 6 weeks, 1 week it had actually gone up. And if you look at Bank Nifty, the difference between Bank Nifty and Nifty is Bank Nifty is trading above the September 23rd high, which was there in Nifty. For instance, Nifty hit a high in the September 24th of 2024, and then it has not crossed that high. Whereas Bank Nifty crossed that high, and it has not still come to the September 24 high. So So what it means is that the Bank Nifty is stronger of the two, and if the buying has to come, it will come from Bank Nifty and to some extent the mid cap and small cap. Now, what are the indicators of a bull phase and a bear phase? So prices are there, it is all visible. But what are things which happen during a bull phase is rising corporate earnings, low inflation, low interest rates, high fund flows and liquidity, and increased investor interest. So if you observe in this, among the five, only the corporate earnings have not been that great. Incidentally, corporate earnings have gone up. It is not that they've decelerated. People think corporate earnings have decelerated. I mean, corporate earnings are negative. They might have decelerated, but not negative. So if you really look at it, we are getting 4.5 out of 5. So this is a bull phase. What is the indicator of a bear phase? Falling corporate earnings? No, that's not true. Rising inflation? No. High or rising interest rates? No. High fund outflows and liquidity crunch. There has been fund outflow only as far as FIIs are concerned. But please note, FIIs have been negative since 2015 in the secondary market. Overall, in the primary market and secondary market together, FIIs have been positive. Low investor interest? No. There has been significant investor interest through the mutual funds. Tomorrow, we will have the mutual fund data, and I'm fairly certain that the data will be very, very strong. So, if you take the indicators of a bear phase, there is really nothing which we can say we are into a bear phase. But are we at the end of a bull phase is what we have to question ourselves. Now, just look at S&P 500. Yesterday, it made an all-time high. It's around 6,400. So it's almost like the US is not bothered about what is happening to the tariff situation. Actually, in my analysis, next year or sometime in the future, US will struggle, and I think we will have a significantly large bear market in US because tariffs will kill US economy unless the court goes against Trump's orders. Right now, I still have hopes that Trump's orders will get thrown out by the court. If it does so, then I think we will have a bull market for longer time. But my thinking is that in the next few months, in US markets will go to significant highs. For instance, in the S&P, I'm expecting 7,500 numbers, 7,500. Right now, it is about 6,400, 6,380 or something. So if you get a 20% rise in S&P, I was also thinking we will get a corresponding rise in the Indian market, which will take us to the 30,000. That is how I calculated 30,000. So let us see what happens. So on Friday, you will be use the FI. This is, I think, this is wrong. Sorry, I got it wrong picture. On Friday, actually, FI is bought and DI is both bought, primarily because of Bharti Airtel, where the promoters sold and FI is bought. But net, they have really not bought, if you really look at the numbers. So after the market closed, we had this Trump and Putin to meet in Alaska on August 15. This news came after our market closed. So that should be an impetus for the bulls to charge tomorrow morning. So we have one positive is FIs were actually net positive on Friday. Trump is meeting Putin with news, good news. Because Trump is saying that we are putting additional 25% because we are buying Russian oil. If Trump and Putin decide to call for a truce in terms of their relationship, as well as a truce as far as the Ukraine war is concerned, then there will be no locus standi for putting another 25% on us. That is why next week becomes crucial. Then let us also look at, what has happened as far as the mutual fund numbers are concerned. As I said, mutual fund numbers will be good. That means liquidity is good. FIs are willing to buy, block deals. Trump and Putin are trying to meet. And so all that should augur well for the bulls. In fact, this is the firepower which the bulls have been given, both in liquidity as well as geopolitics. If after all this they do not fire, then the bull market will come into question like this. For instance, the bears are sitting and saying, should we call it a bear market now, whereas the bull is still, getting audience attraction, saying encore. Basically, they feel that we will have the bull market going forward, bullish phase going forward. Sorry, we are still in a bull market technically. We will have a bullish phase going forward, but the bears are hiding behind the screen, waiting to pounce. So I believe next week is the make or break week. For instance, if next week, if we do not close in the green, then even I will begin to question as to whether we are going to go into a bear market territory. Right now, I believe strongly that we are in bull market territory, bullish phase, and we will do well. And we are likely to do well. No will in market. There's nothing like will. We are likely to do well, and that should give respite to the bulls, as I mentioned, all these factors, and that should augur well for our Indian markets. And when we turn around, then I think we will move faster than the US markets. Then target of 30,000 will come into horizon. If it does not happen, then 21,000 will come into focus. Right now, I'm thinking it is 30,000. I'm not even looking back at even 24,000. Maybe 23,800 is what people are talking. Even okay, if you go to 23,800, but at 21,000, I'm not expecting. Though a lot of people are expecting 21, 22,000, which I don't think will come based on whatever information we have at this point of time. So we continue to be bullish and we will buy on all declines. We have identified stocks continuously. And on Monday, anyway, I show my trades to all my Telegram subscribers. So you will see me buying on all declines. But whatever you do, I hope it is successful. Have a nice. Thank you for joining me.